Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DX Trade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too, but that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2. So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right, guys. Good morning. Welcome back to another live stream. Thanks for being here on this Thursday morning as we jump into another big day. What I like to do with these streams is I like to start out just by highlighting what's on deck, what's on the radar for the day. And here's a couple things that you got to think about today. If you aren't familiar with the stock side of things, I think all of you should be, even if you don't trade stocks or indices. We have Apple after the bell, ticker symbol AAPL. I'm not a shareholder, but I might be if we get a big sell-off. Apple's earnings come after the bell. And you might say, well, I don't trade Apple. I don't care about this. Can you just go over to gold? And I know that somebody in the audience is like, yeah, that's me. I just want you to talk about gold. Listen, this stuff is so important. I'm trying to preach to this. I had somebody comment on a video recently. They said, Nick, can you just start doing videos that are specific to certain markets? Like, can you do a video about indices? Can you do a video about gold? Can you do a video about Forex? And I assume that the reasoning or the idea behind why they wanted that layout on my channel is because they only want to listen to my thoughts on a particular asset or symbol. And while I appreciate anybody who takes time out of their day to listen to my content, like I'm grateful, I think that you have to, if you're going to really listen and learn from the experience that I share on my channel, as well as many of the great guests that come on the show, the full picture of the market is not graspable, I don't know if that's a word, from just looking at one symbol. Now, I know gold is a big chart. I know that the stock market is huge, right? But the story, guys, comes from everything. The market is like a living, breathing thing. Imagine trying to diagnose somebody. I'm not a doctor, but let's just say if you're trying to diagnose something, a doctor does not look at one singular part of the body, right? They look at the full body. If they don't know what's wrong with you, right? If you go to the doctor and say, I don't know what's wrong with me, I feel terrible, are they just going to check your heart? No. They might check your heart for sure, but they'll check, other areas. They'll check your, this is so outside of my scope. I don't know what they check. They check you out, right? The point is, a doctor, a intelligent doctor, is not going to simply look at one part of your body, because they know that the body is made up of the brain and the heart and the lungs and the your blood flow and your everything, right? Your digestive system, everything makes up the body. So when we talk about financial markets, you can't just look, in my opinion, if you're going to be a fundamentalist, which I know a lot of you guys who are hanging out with me here are trying to become, you're trying to up your fundamentals game. Long story short, stop saying I only trade this or I only trade that. Now, if you only place trades on those things, cool. I can get down for that. Like, you might say, I only actually execute trades on gold. I only actually trade currencies. I only trade the NASDAQ. Cool. I can get on board with that, but don't limit your scope to the one asset. Are we on the same page with that? Can we get a thumbs up button? Smash that thumbs up button. A YouTuber that I watch in the stock market world, he says, Hulk smash the like button. Can you do me a favor and Hulk smash the like button? If that made sense, or if you're on the same page, and then we can get into some more charts. So again, long story short, the full picture is that we have Apple earnings after the bell. I'm not a shareholder of Apple, but I care tremendously about what Apple does today. Because Apple is a barometer or an indicator of consumer health. Consumer health is massive. If people are out there and they're spending money on expensive iPhones and expensive Apple watches, and I've got the Apple disease too. I've got an iPhone. I've got, the Apple Watch. I've got an iPad. I've got Apple everything. And then half my office, half my staff, well, like I'm like the only one on my staff. There's like 2 of us that don't use Apple products. Apple is everywhere. It's the dominant player, and the iPhone is just better than the Android. Let's just face that and just accept that as a fact. I'm kidding. I know I'm gonna ruffle some feathers with that one. It's my opinion, and I think the opinion of most people. But anyways, Apple has a whole universe of products, and the demand for those products or the lack of demand for those products is a barometer, an indicator of the consumer health. Just like retail sales numbers are important to us, just like employment data is important to us, Apple's earnings are important to all of us. The dollar index guys and girls, the gold traders, the stock market. This is a picture that gets painted for us this afternoon. In the United States, yes, I'm aware that Android is much bigger in other places outside of the U.S., but in the US, which is, where I'm from, it is weird if you do not have an iPhone. It's not weird. Some of those other products are cool. It's just that, they're the secondhand products. Let's face that as a fact together. I'm kidding. I've just grown up on Apple products. I like Windows and PC. Like when I'm on a computer, I'm on a Windows desktop right now. I prefer computer-wise. I'm not a Mac computer person, but all the content you guys watch, all the, stuff, there's a 95% chance that it's being edited on a Mac because they're beautiful computers. Anyways, stock market is up slightly after yesterday's pretty crazy intraday price action. Take a look at this with me. Here's the S&P 500 on a daily chart. Nick, now you sound like a real American. I am a real American. I'm 110% for capitalism, 110% for American innovation. I don't think I'm a toxic, American. I don't think it's the only great country in the world. I think there's great people all over the world, and but I am proud to be an American, of course. In America, it's weird. I can't get into this topic too much, but it's almost like politically incorrect to be nationalistic. I think I'll say this. I think the most nationalistic people group that I know of is Indian people. They are so proud of their country. I think it's so cool. Everybody, not everybody, but many of the people, I have many friends who are Indian here in America. They're so in love with their country. I think it's so cool. Nick, can you believe that Samsung can make a phone that is better than Apple? I can't believe it because I can't see a better phone in front of me. The iPhone is just undefeated. You've been indoctrinated. Yes, proudly so. It's the same in the UK. Yeah, it's kind of weird. Guys, we're about 5 minutes out from unemployment claims here this morning, which will potentially move the markets. Jobs data is going to be everything going forward here. I'll tell you that because yesterday, so we have claims in 5 minutes. Let me give you this breakdown. Yesterday, the markets were up, they were down. Let me break this down for you. Look at these candles on the S&P. Same thing if you guys were watching gold. You had big pop, big drop. If you were watching the dollar, big drop, then pop, then drop again. So why the carnage? Well, here's what happened. The market popped because Jerome Powell was asked about, is there a possibility that the next move is a rate hike? And he said, we don't think so. The market loved that. Okay, cool, right? That is dovish, but it was what the market read into after. And I will say proudly, I'll pat myself on the back here for a second. I shorted into this move on the Russell. I will show you my trade in just a moment. Jamaicans really patriotic as well. Yes, it's a beautiful thing. Very, very cool when people are patriotic. I went to St. Lucia. People there love their country too. Anyways, why the follow through to the downside then? Or the lack of follow through and then the reversal to the downside. Well, it's because still rate hikes, rate cuts, right, were so ambiguous, so uncertain of when they're going to come. So I think the market was excited that, people were afraid Jerome Powell, myself included. I thought he would come out even more hawkish than he did, to be honest. He came out hawkish, but it wasn't, we're going to rate hike hawkish. So the market excited about that, right? Got excited about that, but then kind of settled down and the dust settled. And it's like, well, hey, look, we still don't have any real good plan for rate cuts. So the story is, in my opinion, higher for longer in some of the earnings numbers that we've seen. Again, remember, all markets matter. I know everyone loves to trade their specific thing. You might trade gold, you might trade currency pairs, you might trade stocks, but they all matter. The earnings numbers that have been coming out, there's been some concern about forward guidance, about some of the numbers that are, coming out. Like Starbucks had a really bad earnings number. UPS and FedEx showed some slowdown. The point is, the consumer might be starting to crack on this inflation period. People are getting hurt by the high prices, and that's starting to, it seems like, starting to materialize. Now, you could push back. You could say, well, look at Visa. Here's Visa. They had earnings that were pretty good, right? Beat the top and bottom line. This is a big indicator of the economy, Visa, right? I don't think we have Amex they did report. They reported great earnings. Now, Amex typically is a little bit more of an affluent average customer than, maybe Discover or MasterCard, MasterCard, Visa. Amex is a little bit more bougie, if you will, as an average customer. So they had good numbers, but it seems like the area of the economy that's hurting the most is the average middle-class person, person who goes to the grocery store and it's like killing them. It hurts all of us. The grocery store is traumatizing these days. But yeah, it's interesting. Anyways, I shorted the Russell yesterday because despite the celebration for, no rate hikes, I shorted during the stream yesterday. I sold into that rally. And this entry will either look really cool if it rolls over or really silly. Guys, we're about 1 minute out from the claims data. So let me go ahead and reset here. I'm going to switch to our all markets view so we can react to the news. Let me not miss it here today. You got your S&P, NASDAQ, Dow, the dollar index, pound USD, euro USD, gold, and oil. All of our charts are pulled up. We got about 30 seconds here to go, guys. I'll be reacting to the news. It's about 490 people. If you enjoy this commentary, if this is helpful to you in any way, I'm glad we're spending some time together today. Do me a quick favor. If this is helpful, all I ask is totally free. Hit the thumbs up button. It really does help just to support what we're trying to do here on the channel. So let's go ahead and jump in. We got our breaking news coming in now. What happened to the silver trade? I stopped out on silver. No longer in that trade. All right, let's see. Claims data should be coming out. See if we get any volatility on this one. Nothing too big just yet. That's going to tell me most likely claims data just came out pretty much as expected, but let's see. Unless the data just hasn't dropped yet. Okay, came out just about as expected. 208,000 unemployment claims compared to the forecasted 212. So kind of a nothing in terms of volatility. That being said, still plenty of potential volatility here today. You had a Fed meeting yesterday that the market is still digesting. You had, at the same time, plenty of data earlier this week. PMI data came in light for manufacturing. People got really excited. I got excited too when I saw the PMI data coming in better than expected last time around for manufacturing PMI on April 1st. Well, we got May 1st. The data came out lighter than expected. And so manufacturing PMI is a pretty cool indicator, because what it tells you is, purchasing managers in the manufacturing sector, are they looking to be more expansive? Are they looking to be more, conservative? And what we saw here is the forecast was for 50. We got 49.2. So manufacturing starting to slow. Well, maybe not starting to slow. I mean, coming down from its last month, which was a little bit more optimistic. So you had that. You also had consumer confidence, which came in light. You had, Jerome Powell not signaling rate cuts anytime soon. So let's go back really quick to the Russell. Somebody asked me, what does the Russell represent? The Russell represents, it's like an index, just like the the S&P 500 is the top 500 stocks. The Dow Jones is the top 30 stocks, or top 30, kind of more conservative basket. The NASDAQ is a lot of tech heavy stocks. The Russell is the Russell 2000 is small cap to mid cap companies. It's an index of many, many companies that kind of represent the belly of the economy, right? It's not the biggest companies. It's not the smallest companies. It's kind of your small to mid cap companies that are on the market. And so they're usually, the Russell is usually a little bit more sensitive to interest rates, which is why I sold the Russell yesterday. Because again, I think that we're left after the dust settles. Again, I could be wrong about this, but I think that after the dust settles, what you've got is a environment where higher for longer is still just the reality that we're in. And that I think that the Russell could struggle in that environment, especially if we continue to see earnings slip here. Again, Apple after the bell today, that'll be a big indicator of consumer strength or weakness today. I'll be very curious to see what that comes out with. The dollar index did a huge flip-flop yesterday. We ran up ahead of the event. Dollar was really, really strong, and then just completely dropped out of the sky here. But I made this point yesterday. I don't really think that the dollar really has anything too concerning about it unless you break this level of support. So the dollar index on a daily chart still looks really healthy, in my opinion. You've got, higher lows, higher highs. This is a healthy looking chart. Now you might say, well, that's a huge red candle. But yes, that's true. But the issue with pointing that out as like that's a bearish case is you are saying that before we've really broken this key area where price has come back several times to rally again. So is there some accumulation happening at this level? Possibly, right? You might, if you're a big institution building a position, you might be adding to your trades here around 105.5. It's a key area for buyers, clearly. If we look left, again, several big candles have exploded off of that 105.5 zone. So for me, the dollar index is not bearish unless it breaks through this level. And what's going to get it to break through that level could be weak jobs tomorrow, maybe. But I think, it could be wrong, but I think jobs are going to continue to be strong. And if they are strong, you might see the dollar index go back and retest that 106.2, whatever level it is, this previous high. It's been a very volatile week for the dollar index. Even though the dollar index hasn't gone too far in either direction, it's been a very volatile week. Look at the size of these candles. These are big moves. Percentage-wise, what are we looking at? This is a 0.5% on the dollar index. Then you had another 0.6%, and then 0.65, and then this range was huge, almost 1%. I know that's not that big if you're a stock index person, or if you trade individual stocks. That's not a very big move, but for the entire dollar index, that's pretty big. The average move is much less, right? You're talking about 0.3 here, 0.3. Here's a big move, a 0.5, right? So this move recently where we were averaging like over 0.5% move per day is pretty volatile. Will we get kind of a chill day today? There's a good case to be made for that, just because you have jobs data coming out tomorrow. And so the market's probably just going to trade sideways, I think, today. We'll see. You never know. These days, things are so volatile. Something could change on that note. Let's take a quick look at gold here. So again, the dollar strength, the inverse correlation between gold and dollar has really confused a lot of people. But remember that the dollar index trades relative to its peers. I've made this point many times, but bear with me. The dollar index trades based on its peers. If the euro is doing well or the pound is doing well, the dollar is going to be negatively impacted by that. So it's not always the case that dollar up, gold down, dollar down, gold up. It's not always exactly like that. It's really related to the other major currencies. Because if all major currencies are deteriorating quickly, gold can go up. But if all major currencies are deteriorating, most likely the dollar index is actually going to be going up as a safe haven relative to its peers, right? So that's when you can get gold and the dollar moving up together. Doesn't happen that often, but it does happen sometimes. What is your view on US 30 seasonally? I will tell you that right now. Let's do month of the year trends. James did a really good video. For those of you who are following us on A1 Trading, James did a really good month of May seasonality video. So if we take a look at the Dow Jones US 30 here, the Dow Jones for the month of May is expected to actually rise on a 10-year look-back period. The average performance in the month of May is 0.86%. It's pretty good. So perhaps there's a bit of a bounce coming based on seasonal trends for US 30. One thing that I noticed about gold is that the expected move for May is very minimal. So you could see the expected move for May is 0.4% positive. For gold, last 10-year average, 0.4%. The last 5 years, a little bit more, 1.52%, but I like to look at the 10-year look back period a little bit more. So maybe a slight positive month for gold if you're just using seasonality data. And of course, seasonality data is very important stuff, but it's not the only thing we look at, right? It's one of a few indicators that we pay attention to. By the way, if you'd like to try out our software here, we'll drop a link here in just a second to sign up or apply for a trial. We do 30-day trials. If that's something you're interested in checking out, if you'd like to try out the Edge Finder for 30 days, you can get access to our seasonality data, the commitment of traders data, retail sentiment, all of our different sentiment surveys and indicators that we've got, as well as our top setups algorithm that you guys see me use in all my videos. If you'd like access to that, we'll drop a link here in just a moment for you, which will allow you to apply for a trial of the Edge Finder. Okay, hold on. I'm grabbing the link. Edge Finder trial. Okay, here it is. If you guys are looking to try out the Edge Finder, just fill out this form. You can apply for a 30-day trial to the tool. There it is. Thanks, Chandler. Try out the Edge Finder here. There you go. Okay, so while we're on the top setups page, let's have a look at this. I'm going to remove the neutrals. A little bit lighter of a list of things here. A lot of currency setups, not a lot of index and commodities trades right now. You've got Euro Kiwi, Pound Kiwi, Aussie Kiwi, Dollar CAD, Copper. I do still have a sell on Euro USD open, CAD Swiss, Kiwi Yen, Aussie Swiss, Yeah. So there's your current top setups. What is this looking at? The bias is generated by looking at all of these different categories: sentiment, technical analysis indicators, and economic data. The Edge Finder pulls this data in, then it computes or calculates scoring based on how these individual data points impact the underlying symbol or asset. So right now, these things are getting polarizing, views. And when they get, a bearish read or a bullish read, what I then do is I go pull up the charts and I say, is this a setup that I like? I manage my risk. I do all my good trading tactics as per usual, but I use the Edge Finder to help scout for trades. So there you go. Silver, I ended up, somebody asked me about my silver trade. So I bought silver here and it did make a move higher, but then it kind of fell apart. Yields jumped, wasn't great for silver, and I stopped out. So I'm no longer in a silver trade. My current trades are, I am short Euro USD, which is the most boring trade ever. It's just gone sideways. It's not really boring. It's moved so much, but it's just not moved anywhere far. It's just moved back and forth really aggressively with that dollar index just moving all over the place. Dollar yen, this was a big drama story. It seems like there is some intervention coming from the Bank of Japan, though I still think we're in an uptrend. I still think the dollar looks good. And if it pulls back, this might be an opportunity, in my opinion, to continue to be a buyer on the dollar yen. So if we do get a continued sell-off, this might be an interesting one to watch out for. But I think you do have to be careful. Probably a real small size for me if I was to take that trade, simply because the volatility is quite high on this one. Dollar yen's not quite getting a bullish read, though. I have to look at why. Hold on. So we're getting +3 on the dollar yen. Interest rates, GDP, services PMI. Okay. So these are some of the factors that are keeping the score not high enough to be bullish on. Silver COT reading. Let's take a look at silver. Silver's got a +4 on the Edge Finder. COT data does look strong for silver specifically. You have a high long to short ratio here. However, COT is not the only thing we look at. Remember, you can trick yourself. A lot of people like to just say, "Oh, I just look at COT data. I look past everything else." But the problem with doing that is that you are using with COT data. Remember, COT data is delayed. You get every Tuesday's data. You get that on Friday. So there is a delay to the data. And so while I still find it useful, you are looking at data that's several days old. So when you're using several days old data, it still can be useful. If you still know somebody is generally more bullish on something a couple days ago, they're probably still bullish on that, most likely. So it's, the COT tracks institutional money flow, which is usually more slow paced. They're not trading in and out massively all the time because they have such big positions they have to fill. And a lot of them are, trend followers, and they're kind of on secular trends in the financial market. So usually we see COT data gradually change over time. Yes, it is an important metric, but it is one of several that are very important on the Edge Finder's calculations. Again, if you want to try out the Edge Finder, we'll drop the link one more time. You can try out the Edge Finder using the link in the chat for 30 days access. Real quick, guys, we're going to take a quick commercial break, and then we're going to be joined by Miko and Marco for Technical Thursdays. Stay tuned. Coming in right after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, and we're back with Miko and Marco for Technical Thursdays. How are you guys doing?
What is up?
Good to have you guys back, and this is a weekly segment on the show that we do. Miko and Marco are highly technical traders, and I always look forward to seeing what you guys are looking at on the charts. We talk a little bit about currencies, gold, indices, and we'll touch on Bitcoin as well. So I guess we can jump right in. Marco, you know the drill. What's on your watch list today?
Sure. So for me, the markets have been really volatile. Almost all 6 of my pairs have showed a lot of volatility, a lot of corrective price action as well. So I'm being more patient. EU looks pretty flat and range bound in this area, especially with this volatility, huge push up, huge push down. So being more patient. EJ showing me a huge drop, ends with a wick, so could not commit. Also stuck in this area as well. Being more patient. Aussie US dollar. Again, I don't like this move. Huge push up, huge push down. And AJ looks the same as EJ. Basically, this move could not commit. It just broke this major low, printed a huge wick and retraced. The pound is really flat and corrective in this general area, so being a lot more patient. And NJ looks the same as EJ and AJ. For this week, I don't have anything on the watch list, for today. And I'm being more patient on all 6 of the pairs that I trade. Tomorrow is NFP, I believe. So we may see some moves on NFP. And the markets usually before NFP, I have found that they just tend to kind of linger around the same price. And then NFP hits, and then it usually picks a direction. So preparing for NFP, I'm not trading the NFP either. I stopped trading at around 2 or 3 a.m. On an NFP Friday. I don't think I'm going to get any setups today, so let's say more easy week.
Yeah, no, I think that's a fair assessment in terms of volatility today. I was mentioning this earlier on the dollar index. You've had these really crazy swings back and forth, but each day is accompanied with kind of a big, event, whether it be FOMC, whether it be PMI data. But today's a little bit of a breather day. Perhaps a bit of sideways movement, as you're talking about, in anticipation for NFP, where we might get a little bit of a directional bias. Miko, what about you? Are you with the dollar index here? What are your thoughts on some of the crosses that you're watching?
So yeah, I'm still pretty bullish on the dollar. I'm looking for opportunities that favor dollar strength. We've got a lot of consolidation, so price action hasn't been great. But I have mapped out some areas just underneath where we're trading around 105, this swing high here, which we broke through quite nicely. I'm looking to see maybe if we get a retest of it for then some more upside. So I'm kind of hoping for maybe some more dollar weakness for then some dollar bullishness later, maybe next week. But yeah, I'm very much a dollar bull. We've been printing these higher highs and higher lows on the daily chart. I'm looking to follow that along. So taking that information into pairs like Euro USD, we're doing the exact inverse of that. So I am looking at selling opportunities. I'm looking to see if Euro USD can get back to the high here, and then I'll be looking to short from this area here, targeting these lows. Same with pound USD. I was short pound USD on Monday, but unfortunately just got stopped out by a couple of pips before the market did drop. So I'm looking to see if I can get back into another position. I'll choose between the two, pound USD short, Euro USD short, of course, very similar trade. So I'll just pick between the two, whichever gives me the better opportunity. I think that might be pound. And dollar CAD as well. I'm looking for longs in dollar CAD. I'm looking at this zone currently breaking through. So I need to see how that 4H candle closes. But at the moment, not looking too good there for some longs. But yeah, my main focus is dollar pairs for now.
Yeah, and I kind of am on the same boat with you in terms of the dollar index. I think it looks strong, and part of the reason that I actually shorted the Russell is so the Russell is small cap stocks, and it's very sensitive to what the dollar does. Not always, but because this area of the market is so sensitive to interest rates, if you get strong economic data, if you get stuff that gets the dollar to pop, if the dollar is moving higher, likely the Russell will feel the pressure of that. You know, whether it be inflation concerns or interest rates staying higher for longer. I'm in the same camp with you. I think from a fundamental perspective, I like it up, but I also
Mhm.
the technicals look really good. I think where I want to ask you about this too, Miko, while we're talking about this. What I've noticed is a lot of people will comment on videos and stuff and say, well, look, you had a huge red candle. But I think if you take a look at the daily chart here, though, you've got, as you mentioned right at the top of your little segue there, you talked about this is consolidation. Now, volatile, but still consolidating. Like it's not broken anything. It's not, I would have expected FOMC to probably do, a movement that would have followed through one way or the other, but maybe that's waiting for NFP. And I think both of you guys seem just patient on a day like this. I think a lot of people, they get all, amped up on the Fed meeting yesterday and they want to trade, they want to get in, make money right now. But really, maybe it's okay to just accept, don't make a bunch of mistakes today. Today is a
Mhm.
waiting day for NFP. Is that fair, Miko? Is this just a normal, healthy pullback? I think the only thing for me is if it breaks that level, then we might have short-term bearishness on the dollar. Is that kind of same thesis?
Yeah, very, very similar. I
Yeah.
mean, with the dollar, I think you have to pick your moments. You
Yeah.
can't try and look to chase anything. Have a bias. If you have a bias, you don't necessarily have to. You might be neutral, but if you do have a bias, you just wait for the opportunities that fit that bias or fit that plan. And yeah, if I get what I'm looking for from the dollar, I'm looking at that support or this high here. Those are the two areas I'm looking to not buy dollar, but sell Euro USD and other corresponding markets. If we start breaking through those levels, then I'll hold my hands up and see what happens next. But
Yeah.
yeah, just being patient. Of course, we have NFP tomorrow, which will definitely be a big driver of the market. Yeah, if I don't get a position before then I'll see what happens after NFP and maybe plot some trades after.
Fair enough. So Marco, I want to jump
Mhm,
over to you
mhm,
again, go to our next topic of gold. But before you do gold,
mhm.
I'd love to just get your thoughts too on the dollar index, because right now you're really seeing no decisive direction. But what are your thoughts on the dollar index and gold?
Sure, sure. Let me take a look. So let's do the dollar index first. So on this 1 hour looks very flat and corrective. 4 hour, same story. I think I'm gonna need to bump it up to the daily. On the daily, yeah, I'm seeing a lot of big red candles.
Mm-hmm.
So some selling pressure, but overall kind of looks like Bitcoin maybe, just
Mhm.
you had the up move and now it's stalling, even breaking lower.
Yep.
So for me, I don't see much strength in this currently, especially on this 4 hour and 1 hour. This looks very flat and very corrective. I would be patient in this area. I would wait for the price to commit with an up move or a down move, basically breaking out of this flat structure, because I can definitely identify these extremes of the range. So I want to see it break out of the range. So that is for the DXY. And for gold, let's see that one. So gold, it has started to move down a bit lower. Let me see the daily first. Yeah, so I'm seeing this big red candle, this one as well, so some large selling pressure, but still it doesn't look as explosive as the move going up. So I don't see much selling pressure, but I would expect this to move down a bit more. On the 4 hour, yeah, I'm seeing some large bearish legs as well. And on the 1 hour, it's going to look pretty flat, isn't it? Yeah, it's kind of flat in this general area. So gold, my bias is for the price to go down, to be honest.
Yeah.
Just by looking at the daily. Yeah.
It's definitely lost its invincibility run that it had the first few months of 2024. The recent push lower has also, I think, just to add a touch of fundamentals to the picture. Geopolitics are a real thing. People concerned about what's going on in the Middle East, that has quieted down a little bit. I don't want to say it's no longer a thing, because it's still a really tough situation in that part of the world. But in terms of taking the headlines by storm, it's really calmed down. So that's taken a little bit of the risk premium, I guess, that gold sometimes will get. And at the same time, the dollar strength is starting to weigh, I think, a little bit on gold, simply because interest rates not being cut for a while is a negative for gold. That's not very helpful to the gold bullish story. That being said, Mika, I want to ask your thoughts on gold too, because I know we've talked about this before, and this is another testament to patience, because when it was ripping higher, it was hard not to, even, for me, I caught a lot of this move. I was really fortunate to be able to catch most of the move here, but I got stopped out or trailed out. I want to say like right around here, and then I watched it keep going. And during this time, I felt the urge, I felt the temptation to be like, I just need to get back in this thing. It's moving so hot. And here it is now. If you had done that, you've had a few weeks of just selling. So, the patience that you had when we talked about gold in the past about, there's still potential pullback plays at some point, is probably paying dividends that you did not chase. And for people who also did not chase, they're probably really glad that they did not. Where are your thoughts with gold? Is this pullback just getting started, or are we finding a bottom here?
I do think we'll be finding a bottom soon. I'm looking at upside. I think we probably see some intraday opportunities short, but longer term, still very bullish with gold and silver as well. I actually prefer silver a little bit better to gold, but yeah, very, very similar market. So I'm expecting more upside. I have marked out this zone here. I'm not too sure we'll have as big of a pullback to test that zone. I think we'll probably find our feet soon enough before that. But really what I'm looking for me to be looking to long gold, because there is no kind of big level apart from this one in this area. We're in the middle of nowhere. So I want to see evidence that the market is breaking structure in terms of these highs here on the 4 hour. If you can start doing that, fantastic. Then I can be looking for some long to take it higher. And that's when I'll look to jump into some buys. On silver, we're heading into a really, really big level, which is interesting, which is this 26.15 level here. So that's why I prefer silver a little bit better, because we're coming onto some solid support, which of course we could break, but at least I know I'm buying from a really nice area of value. So if silver can bounce here, I'll be looking to see what happens across Friday of NFP, and hopefully we can get some longs, and yeah, we'll be targeting the highs again. So yeah, I think we'll be forming a bottom pretty soon.
So, Mika, with silver, what I thought was kind of interesting, I'll show you my chart here. You drew up the this almost a weekly chart level of support. I mean, that's a huge level around that 25.50. I'm a silver stacker, as they say on YouTube. I don't know if you've ever delved into that side of YouTube. It's kind of a weird side of YouTube. It's people who collect physical silver. I own a little bit. It's a nerdy hobby, but it's also kind of a prepper side of YouTube. So that's where you got to be careful, because people are like, the end of the world, buy silver and gold, which doesn't actually make any sense, because if the world ended, what is a rock going to do for you? But anyways, I like to watch that content sometimes. Anyways, for a long time, that community got so excited when we finally broke through that $25 hurdle. It was just such a, we could not get past that level. Finally, we're starting to see it. And, I watch that content semi-regularly. I'll check in every once in a while, listen to the dealers and, the people who are stackers and things like that. And as this pulls back, I wonder if this is one big opportunity. Who the real stackers are, or the ultimate stackers, are central banks, right? Central banks are the ultimate stackers. They're the real ones that have deep pockets that can buy tons of physical gold or physical silver. They prefer gold, but from a perspective of people and individuals, they could still look at silver. I wonder if your thought process on this, Miko, is like a longer term play, because that's such a key level on the weekly chart. If you get that pullback, is that, like a wide stop loss, like let that thing run kind of thing? Or is that more of like a shorter term bounce from that level that you'd be looking at?
It's similar to how I normally trade, but I normally enter on the hourly, but this one I'll be using the 4H to enter, so slightly bigger stop loss and waiting for a bit more development before I do take the trade. But yeah, it's at a really big level, and of course, since I've recently made the tweak to trading stop loss, if one thing leads to another, maybe I could catch a really nice win. But the full process behind this idea is I'm expecting silver to come back to where we came from, back at 28.89. And I think silver will be following gold sooner or later in terms of really seeing some breakouts. So it is more of a longer term play, but I'll manage it how I normally manage my trades and just see what we can do on that level. And yeah, hopefully I can get a nice trade on silver or gold. Either one looks good.
Yeah, and I also want to just talk because I talked about my own silver trade for quite some time. I had this daily chart level that I was watching, and I ended up I did get stopped out on this one. I bought into this, saw a little bit of a reaction, but when it took out these lows, I ended up stopping out. With today continuing its sell off, I'm feeling kind of grateful for the stop loss, right? The insurance that it gives me here, and if it does continue to go lower. I'm not looking to necessarily get into silver right away, but if we catch a bounce and we get some economic data, some of the indicators that I look for, I might find or potentially join you on that silver trade. So could be interesting to watch going forward. Let's go next topic. We got indices, like a drama queen here recently. It's just been chaotic with everything going on. Marco, what are your thoughts on any of them? S&P, NASDAQ, or the Dow? What are you looking at, or what are you seeing on those?
So for the S&P, 1 hour looks pretty flat and corrective. 4 hour, sort of a similar story. I'm seeing some large bearish pressure in this leg, but I think the daily is going to paint the best picture. And the daily is, for me, still going down. So this is kind of correcting. I think we're not going to get a reversal from this bearish momentum. I think this is just a small pause before the price keeps dropping. So I would expect more downside on the S&P. And we had a big rally going up. So the correction can be a bit larger. I don't think this is the whole correction from this whole large rally going up. I think it's going to look more something like this, right?
Yeah, I think that's a fair, and that ended up being about a 10 to 15% pullback during that late part of 2023. Before that, it was pretty much a straight shot throughout the year, and then you had it was about a 10% pullback here, or correction on the S&P. I think it's appropriate that we could see something similar. We'll have to just keep waiting and seeing. What do you think, Miko, in terms of the indices? A lot of drama yesterday with Powell's speaking and all of the chaos that ensued after that. I'd be curious what your thoughts are on the daily chart too, because as Marco was looking at that, I was wondering if this is looking like a potential engulfing candle, and whether or not is that going to follow through and retest these lows. What do you think on S&P?
Yeah, I mean, I have a similar outlook to Marco. I'm very much a longer-term bull of this one because I'm keeping in mind this massive swing here. So even if we do start, dropping, taking out lows, I do think eventually we are going to start pushing back up again. So viewing this as a pullback until proven otherwise, basically. But yeah, we are still quite corrective. Normally, you want to see a bit more life come back into the market if this is going to be our next high low. We are still quite corrective, and you can see that on the 4H as well, still seeing some strong bearish moves there, which is not the best sign. So if this is going to be the low, I need to see some strength coming back into the market, and then there could be some nice pullbacks after. But yeah, I wouldn't be surprised to see another push to the low, even breaking through the low as well before maybe we do push up. But yeah, I still do see a lot more upside.
Yeah, should be interesting to see how that all plays out. We've got jobs data tomorrow, which will move everything from currencies to commodities to indices. I guess our last stop to talk about is Bitcoin, which really we broke that level, right, Marco? I think you mentioned that earlier in the stream.
Yeah, broke down.
Yeah, we broke Bitcoin. What's your thoughts on this one?
Yeah, so for me, my bias was for this to break lower. So I would say more downside is expected. I think we were talking about this level, so around 52,000, because this is kind of offering no support, right? So this just may come crashing down all the way to 52, maybe even lower. I'm definitely not convinced about it continuing up with some explosive momentum. Again, I'm seeing some large bearish legs, and I'm not seeing much bullish pressure. Now that this broke the key level, definitely expecting more downside, and it's looking similar to, I think, DXY. I think I mentioned the DXY on the 4-hour. No, I got a bit confused, sorry. But basically, that was a key level that we were looking at, and now it's broken, so not a good sign for bulls on Bitcoin.
Yeah, one thing to note, just thematically, I think of this year so far, opening up, I mean, Bitcoin is trading right in line with the NASDAQ, because when everything was looking real good, like rate cuts were going to come into the picture at some point, and the economy's hanging in there, Bitcoin does well in that environment. Bitcoin is like, it needs to be spoon fed. It needs to be like living in the most perfect sheltered life in order to go up. Anything changes in that story where you have, like, recently rate cuts not expected to come anytime soon, which is no short-term relief to the market, but also I think something to mention about Bitcoin, it's a very like retail heavy thing people like to buy. Like the average person our age is like, they're more interested in buying a little bit of Bitcoin than they are than buying gold. It's a young person's kind of thing on average. Not, there's some older people who like the technology too, but it's a young person's game. And the young person right now is starting to really feel the effects of inflation. I think everyone in the audience has probably felt the effects of inflation, but young people and people who are more in the middle class, they're feeling it more, right? Prices are going up. It's starting to actually show up in some of the data that people are hurting. The grocery store is starting to like punch them in the face every week. And, Bitcoin is a discretionary purchase or investment for a lot of people. It's when they have a little extra money, they buy some Bitcoin. If people don't have extra money, the Bitcoin money flow maybe dries up a little bit. I don't know. That's just my take on it, and I would agree with Marco that I would not be surprised that if the stock market is looking a little wobbly, that so will Bitcoin. What do you think, Mika? Are you a bear? Are you looking for a bigger? I think when we talked before, you were talking about still being longer term bullish, but maybe having room to the downside. Is that still how you feel?
Yeah, since we breaking through that support, that's exactly how I feel.
Yeah.
I'm looking at prices around 52K or maybe 48K, which is that prior high there as well. Yeah, it's not looking good because we've had a few attempts to try and continue this momentum, as in continue the bullish trend, but we failed. And now that we've seen a pretty strong break of that support, yeah, I'm not so confident that we're going to see upsides in the near future. I'm still longer term bullish. I'm a big fan of all of this momentum here from a technical standpoint anyway. We've had a really, really sharp move higher, and this is still quite corrective. It's not really, yes, we've seen a bit of momentum, but I'm not seeing really strong signs of reversal. So I do expect this just to be a bigger pullback in the bigger picture of things. But yeah, support around here could be interesting for Bitcoin.
Very cool. Well, I think we covered everything that we're supposed to do according to our weekly game plans here, guys.
Yeah.
I just want to ask everybody in the audience, can you guys do us a favor? On the A1 trading side of things, each week we bring on guests from all over the world. We're trying to grow this community live stream, but also we're trying to help the people who contribute to make it possible. Miko and Marco both have their own YouTube channels. The producer here just dropped the links for you guys to go subscribe to them. Do us a favor. If this show was helpful to you in any way, the biggest thing I could ask from you is to make sure to go subscribe to Miko and Marco. Continue getting free trading education. No need to go buy super fancy stuff. Miko and Marco have great content on their channels. We got the show here loaded up for you each week. And make sure to do that. Again, it is a great way to support the show. It's just by supporting our guests. So Miko, Marco, thank you guys very much for coming on today. And I guess we'll see you back next week.
I just have
Appreciate
one
it.
more thing.
Oh, yes. What do you got?
I see Tim's comment. Marcos Grandma is going long, and I actually
Ah.
do think it's a good time to start averaging in, start buying. So
Yeah,
it's
that's
not a bad price. It's a good price, I think.
okay. The grandma indicator reigns supreme. So
Yeah.
we'll have to keep an eye on that one. Thanks, guys,
I'll
for
tell you
coming
the
on the
next
show.
time when she sees new Bitcoin in the newspaper. So.
Yeah, right.
Yeah.
All right, guys. We'll see you next time. Thanks very much for coming on.
Okay. Thank
See
you. See
you.
ya.
Goodbye.
See you guys. All right, guys. And yeah, so indices pulling back here slightly this morning now. I pulled up a 5-minute chart just to watch the New York Open here. Comes out in about 20 minutes. We'll see the stock market open up. So for index traders, keep an eye on that. Gold is really selling off here. Look at the hourly candle. Take a look at this daily chart. I mean, I would say if you're watching gold here, if you get a break of this level, see, as I can't remember if it was, I think it was Miko that mentioned this. If you break this level support, suddenly where's the next leg of support? Like gold might have a bigger corrective move. And in my opinion, you know, you guys know, I if you watch the show regularly, like I was super bullish on gold. I rode most of this move to the upside, but during this time we had more cooling economic data. It looked like rate cuts might still come into the picture. And then you had geopolitics ramp up. So there was just so many reasons for me to stay long gold. But then, and now, my concern with gold and why I'm not buying it right now is because I don't see rate cuts nearly as clearly as I did when I bought gold back here. Earlier in the year, it looked more likely that we were going to finally get talks of rate cuts. But as we stand today, and as we heard from Jerome Powell yesterday, rate cuts don't seem to be on the menu right now. No rate cuts for me means you be careful with gold. That means gold may have a bigger correction coming. And that could mean potentially a retest of this 2200 level. I know it sounds, you know, like a huge move, but gold makes huge moves every once in a while. And, you know, just as fast as it has gone up, it can go down. Now, I'm not bearish on gold. I'm not shorting gold. I still think this is an overall uptrend that I want to be a buyer in. But I need to see a few things flip on our heat map here. If I'm looking at gold, I need to see economic data start to materially weaken for me to get long gold. Because if economic data materially weakens, or we start to see inflation start to cool off, I have the green light, or in this case, the blue light, to look for bullish setups. But as we stand, gold has a neutral reading. The trend is starting to flip bearish, right, in the short term. And economic indicators are a bit mixed here. So for me, with my scoring system here, I don't have the blue light for bullish setups, and I don't have the red light either for bearish ones, because you also have some bullish things mixed in here as well. We are seeing like manufacturing PMI and services PMI. These data points, for example, are slowing down. That's giving us the blue light on gold. But remember, this is why when we talk about the edge finder exists. The edge finder exists because what traders typically do is they look at one thing, they look at one thing, they look at one thing, and they ignore the rest. In my view, as a professional in this business, you can't just tunnel vision on one indicator. You have to look at really as many as you can possibly look at that actually matter to the financial market that you're looking at, right? The Edge Finder is an attempt to do that. If you guys want to try it out for 30 days, we'll drop the link here again to trial out that. And you can apply for that trial. We'll drop the link here in just a moment. Nick, what's your name? My name is Nick. Try out the Edge Finder using this link. There it is. All right, if you guys want to try it out for 30 days, there's the access link to get some more information about our tool. And with that said, we'll call it there. Hello, Nick. Can you look at dollar Swiss before you leave? Yes, I can, just for you. Last chart of the day is going to be dollar Swiss from my friend Zeus. Please don't smite me. Okay, dollar Swiss. Last chart of the day. Before I go make a video and do like 50 more charts. Last chart of the day, pirate hat. Of course. Of course, pirate hat's going on for the last chart of the day. All right. Dollar Swiss is pretty much just the dollar index for me. And the dollar index I've mentioned, trending up, but consolidating. Dollar Swiss, same story. I think the chart looks pretty good to the upside. And do I have a reading on dollar Swiss? So I do not have a reading on dollar Swiss. If I take out the neutral readings, no USD CHF bullishness. So what this would actually mean is I think the trend continues just like the dollar does, but I don't have any trades. And I am not, even though that's a key level of support, what the edge finder is telling me is that there's other trades that I like more on the dollar, like Kiwi dollar, Euro dollar. I have a short on Euro dollar currently. Now, if you are looking at dollar Swiss, that will probably just move with the dollar. So I am bullish the dollar overall, but I like other USD crosses more than dollar Swiss. Hopefully that makes sense. As we wrap up, can I ask you guys to do one more thing? If you'd like to keep up with the show, we put a lot of details inside of our Telegram channel. We're going to drop the link to our Telegram channel right now. It's free to join. We put daily chart analysis, updates about the show. You can vote on things that we do on the show. If you're a real fan, click this link right there. Boom, bam. Thank you, ma'am. Join the free Telegram. Link to the edge finder's not working. Oh, anybody else having that issue? If you're having that issue, head over to a1trading.com. You can try this link again, or you can head over to a1trading.com. And if you need extra help, there's a live chat support in the bottom right hand of the screen so that you can chat with someone on my staff. Thanks, guys, for tuning in. Have a great rest of your day. Appreciate you for hanging out with us, and we will see you back on the next one. See you guys.
Thanks again for watching today's show. Our goal at A1 Trading is to share free value to you, our audience, through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more, lest ye walk the plank. Join our crew as we head out to go long on gold. See you next time.